Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. Here's actually the situation hasn't changed significantly. Market mostly is calling around the same resistance. It's 1862, 1867 confluence. But on a lower time frame, yesterday we haven't got any clear bearish reversal patterns. It probably makes bears to wait and sit in the hands and wait for clarity. And at the same time, we need to keep an eye on tomorrow release of the gross domestic product and retail sales, which might become really big catalysis for some action, depending on what performance we will get. In general, overall situation stands relatively supportive for the gold, just because of the performance of the interest rate. So if we take a look at the 10-year yield, you could see that third week in a row market is going lower, and on the daily chart you can see that interest rates are falling. It's not really very fast, but still they are moving lower, and that in general creates the positive background, because with the high inflation, real interest rates are dropping more and more in a negative territory, which is supportive for the gold. At the same time, today our forum member Giorgetta shares with us the chart that shows the price of the gold in euro. And on this chart, you could see the bearish pattern. So actually, we have the yesterday it was formed the bearish reversal candle together with grubber. It suggests taking out of this loss. It means that the overall performance here should be down. It might happen in the two ways. Either gold will keep dropping or euro will show really strength, some strong performance. It might happen, but in general, appearing of this pattern it suggests that maybe we still should get retracement on the gold market, some pullback, because theoretically it is probably should be, well, they are not coincide with each other. So if we suggest poor performance on the gold, it suggests some strength in the United States dollar. And if we suggest strength in the euro, it suggests weakness in the United States dollar. So that's contradictive. It means that something probably average should happen right here, and it means that on the gold market we still could get the pullback out from some resistance level. But at the same time, we should be careful with the starting point of this pattern. With this downward retracement, because as you could see from the yesterday action, although it was nicely looking engulfing, I would tell that probably you could use it for taking the position, but at the same time you can see market has moved above it and above the OP, which is actually currently seems not quite reasonable type of performance. It's because major target already has been set. It means that some supportive factor stands behind gold and something is buying. Somebody is buying gold. Which is, well, makes overall bearish context a bit tricky, and makes us to be very careful for planning and taking some short positions if even we see some resistance levels, completion of some targets. So it means that we definitely should keep an eye on some patterns. Because on the euro currency, currently it suggests that euro is coming to the XOP that we have on euro currency. So who knows, maybe gold market also could follow to that, although it shows not as strong performance as euro currency yesterday. Besides, as I said in the beginning of the video, that interest rates are falling, which is also supportive for the gold. So we should be really a bit skeptic on bearish setups. We need to take the scrutiny look at it and before making any decision. Here, actually, what we have yesterday, although we talked about the possible catalyst equal to sell, but you can see it has turned to the completed butterfly patterns 127. And well, except this butterfly, we do not see yet any significant bearish continuation. So in current moment, it's a bit tricky to think about taking any short position. So we need to see what will happen. The market really could keep going on 1618. So we need to see something really more extended. I mean, for example, as we said yesterday, it may be the head and shoulders. If we will get something of this kind, right, that might be used for possible taking the short position, at least because your risk in this case will be significantly smaller. So that's actually what we intend to keep an eye on. So 2 moments. First of all, yesterday it will be tomorrow it will be a release of the data. It's important data release. And on the hourly chart, before taking the short position, although we have some background for that, we still need to get some clear bearish pattern, because it will be safer and well, let us to place the tighter stop, and it's already will show some signs of the reversal. So currently, especially with the recent performance, it's a bit tricky, and we think that it would be better to wait and see what will happen.